Speaker we have is Stuart Brown from Guild Mortgage. So Stuart, if you want to come up here, and then Steve, be ready to come up in 10 minutes. Thank you.
Thank you. Good morning. I don't know about you guys, but is this not a beautiful morning today? This is my favorite time of year. Yeah, give it up for just the beauty of Oregon and being here today. Thanks to YCAR for putting this together as well. This is a blast. My name's Stuart Brown, as was indicated. We have Sharon, where are you? Sharon Champagne, loan partner. You all know Sharon too, so thank you very much. We'll be here afterwards. Sharon will be there to answer questions about any of this as well. So thanks again. Depository institutions, such as banks who do loans also, have had an obligation to something called the Community Reinvestment Act. Has anybody heard of what that is? KeyBank, do we have KeyBank representatives here today? KeyBank actually has a fairly notable CRA loan where it's 100% financing for targeted areas. Well, a lot of people don't realize that we as non-bank entities also have a Community Reinvestment Act obligation, particularly those like Guild who sell direct to Fannie Mae and service a large percentage of our loans. A lot of people don't realize that Guild you actually make your payments about 80% of the time to Guild when you get a loan with us. So that makes us much more attentive to the CRA requirements. So every year we have a loan type of one form or another. Last year we did the 1% down. Had anybody heard about the 1% down program we did for a while? It was very successful, and that's a part of our Community Reinvestment Act commitment. So it's about giving back to our communities, and particularly to underserved areas or targeted areas. So the 1% down worked really well, so this newest one is called 321 Home. And this program works under what is called the Fannie Mae Home Ready or Freddie Mac Home Possible. Right now we're focused on Freddie Mac Home Possible, which again is for targeted areas, and it's for 100% of median income. And if I remember correctly, median income for Yamhill County generally is about $54,000. So, interesting thing about that limitation is a lot of households have income greater than $54,000, so that can naturally eliminate a lot of people. However, as is noted in your little packets here, there is a mapping tool, and one of the really neat things about Yamhill County and the surrounding areas is we have a lot of areas that are in what are called the unlimited income area, where your household income can basically be unlimited. So there are a lot of families that could be eligible for this program. Does that make sense about Community Reinvestment Act and its importance? Again, it's for, yes? It's the location of the home they wish to purchase. So you can use the mapping tool, or you can call any of us on the team and we can map it out for you, but you'll often be surprised by how many people are in the unlimited income area and will qualify. So the plus is, it's 3% down. It falls under Home Possible, which is Freddie Mac's version of Home Ready, 3% down. It has reduced mortgage insurance. So it's 25% coverage, so the mortgage insurance that's required for it is typically lower. Guild, because again, we service many of these loans, we will service all of these loans. We actually are making a contribution and putting our own money into this. So we've set a bunch of money aside to do this, and we will give the borrower at closing a $2,000 Home Depot gift card and a $1,500 direct credit toward closing costs. And the basic minimum requirements are, it's got conforming guidelines for loan amounts, 450, 100. Credit scores have to be 620 or above, but I will give one caveat that it really does work better if credit scores are in the 700 or above range. If they're under 700, they tend to be better served still in FHA. And it'll have a little bit to do with their total house payment and general affordability. So that's the basic nuts and bolts of the benefits. $2,000 gift card with Home Depot, $1,500 credit toward closing costs, and reduced MI, so their payment is lower. Excuse me. We have there will be a lot of questions, and we have an FAQ at the back table too, if you're interested. So this is for purchase transactions only, and you do have to be a first-time home buyer. However, only one of the borrowers in the household has to be that first-time home buyer. 30-year fixed rates only, and the minimum loan to value is 95%. There are a couple of limitations on debt to income ratio, so if they're really stretching to get into this house, again, we're going to probably fall back to FHA that'll have a little bit more liberal guidelines for being approved with the ratios. PMI, it's conventional it's conventional mortgage insurance, so it'll fall under the standard conventional guidelines as opposed to FHA, which can be much longer, if not for the life of the loan. Gifts are totally fine, so it follows the normal guidelines for gifts for Fannie Mae and Freddie Mac. And you can't own any other properties at the time. So if you classify as a first-time home buyer, which means you haven't owned a home for 3 years, and you owned a home, you know, in New Mexico 5 years ago when you got relocated, you won't qualify for this program. There is actually a maximum liquidity requirement. So if you can afford not to do this, you may not be eligible. So if you have a whole lot of money in the bank and you're just choosing to get a Home Depot gift card and put less down, sorry, it doesn't work. It really is targeted to first-time home buyers who have a particular need and in certain areas of the community. So I think you'll find the mapping tool kind of interesting. If you have a first-time home buyer who could be eligible, they may want to switch to this program. And we've had a number of clients when it first rolled out switch from FHA into this, and we were really excited to be able to offer them a Home Depot gift card and that larger credit. We had one yesterday that under the first scenario that they went in under, they were needing about $17,200 to close. And by the time we restructured this, their payment went down almost $100, and they're going to go to closing with $12,700. So it's a big difference. And again, as a direct seller servicer to Fannie and being able to service our own loans, it's a privilege to be able to find solutions like this for our borrowers and to be a guild. So thanks a bunch. Questions? 3 years. They cannot have owned a home for 3 years.
Then you said the person that owned a home 5 years ago in New Mexico moved here would not qualify.
They would not, because they still own a home.
That's currently still owned.
Yeah, currently owned, correct. Yeah. You bet. Yeah, Corey.
Can you find the Home Depot $1,000 to a repair scenario or something prior to?
You could use the $2,000 Home Depot gift. Oh, prior to closing, no. Can't give you the money until you close. Right. Do it at closing. Yeah. Good idea, though. We'll have to work on that one. Great. Any other questions? Thanks a bunch. Enjoy your day.